There's a quiet force driving your insurance premiums higher, and it's not just inflation or catastrophe losses, it's litigation. Over the last decade, the legal environment in the United States has become significantly more aggressive, especially when it comes to personal injury claims and liability lawsuits. We're seeing a dramatic rise in large jury awards, also known as nuclear verdicts, verdicts that often exceed $10 million. These aren't just rare outliers anymore. They're becoming more common, and they're directly impacting how insurers price risk. What's driving these massive verdicts? It starts with plaintiff attorney tactics. Law firms are using sophisticated marketing and financing strategies to attract and fund high-dollar cases. Litigation funding, where third-party investors back lawsuits in exchange for a portion of the award, has added even more fuel to the fire. These financial incentives can push cases further into court and drive up the size of settlements and jury awards. In addition, social inflation, a term used to describe the impact of changing public attitudes on legal outcomes, is playing a major role. Jurors today are more willing to assign blame to large corporations and deliver high-dollar verdicts, even for subjective damages like emotional distress or pain and suffering. That's causing insurers to pay out more than they would have for similar cases just a few years ago. So, which lines of business are getting hit the hardest? Commercial auto is feeling the most acute pain. Verdicts in trucking accidents, for example, have exploded in recent years, leading to skyrocketing premiums and even coverage exits in some states. General liability and excess casualty coverage are also facing increasing claim severity, especially for industries like construction, hospitality, and retail, where slip-and-fall incidents and third-party liability claims are frequent. Medical malpractice, product liability, and employment practices liability are all under pressure too. The common theme? Legal complexity and high-dollar exposures. So what are states doing about it? Several state legislatures have introduced tort reform measures aimed at curbing system abuse and reducing fraudulent or inflated lawsuits. These include placing caps on non-economic damages, requiring greater transparency in litigation funding arrangements, and reforming joint and several liability rules, adjusting attorney fee multipliers to reduce excessive legal costs. Some states, like Florida and Texas, have already passed meaningful reform packages, but the impact on insurance pricing will take time to be fully realized. Now, let's consider the bigger picture. If litigation trends continue at their current pace without reform, insurance affordability and availability will become a growing concern. Carriers will be forced to raise rates, reduce coverage, or exit markets altogether. That creates ripple effects for consumers, businesses, and the broader economy. The bottom line? Rising litigation costs are no longer just a legal issue, they're a pricing issue, a capacity issue, a public policy issue, and if left unchecked, they could destabilize some insurance markets entirely. This is why P&C insurers are investing more in claim defense lobbying for tort reform and adjusting underwriting strategies to navigate these shifting legal landscapes. Litigation is part of the insurance equation, but unchecked, it can tilt the balance too far, making risk more expensive and harder to cover. If you found this helpful, don't forget to like, subscribe, and follow InsurKnowledge for more breakdowns on the trends transforming insurance.